Warren Buffett, the legendary investor who has beaten the market for decades, loves his job so much that he jokes about running his company, Berkshire Hathaway, by Ouija board after he's gone. But at age 78, the question of who will run the company is a serious one. In the next half hour, Warren Buffett and members of his inner circle shed some light on what will happen to Berkshire Hathaway when the billionaire investor from Omaha steps down. He stands as the world's second richest man, worth $37 billion. Yet he lives in the same house he's had for 50 years, just minutes away from his office in Hewitt Plaza in downtown Omaha. He grew his holding company, Berkshire Hathaway, from a struggling textile manufacturer to a sprawling conglomerate with interests in everything from candy to carpet to car insurance.
A gecko, he can be trusted.
And for decades, his returns have grown even more. Over the last 20 years, Berkshire has averaged a 12.69% return compared to just 6.56% for the S&P 500. Thousands of shareholders converge every year on the city's Quest Center for the Berkshire Hathaway annual meeting, often called the Woodstock of American capitalism. They flock to receive the wisdom of the Oracle of Omaha, often doled out in choice, folksy phrases. Sitting down with us, Buffett was his proverbial self when talking about his faith in the American economic machine.
It's sputtering now, and it will, at some point, be functioning magnificently. If you played golf and all the holes were par threes, you'd have a better score than if there are a few par fives, but you can't play 18 holes without having a few par fives.
But in keeping with the rest of the market, Buffett hasn't had a good year. Berkshire's A-shares went from a high of $147,000 last September to a low of $72,400 in March. And Standard & Poor's is reviewing Berkshire's coveted AAA rating on the heels of a downgrade by Fitch and Moody's. Though he admits to some mistakes, like buying ConocoPhillips shares right before oil prices tumbled, he still has faith in his long-standing value investing philosophy. Buy the right stuff, at the right price, and hold.
Well, we really wouldn't be doing anything differently. I mean, our job is to try and find good businesses to buy, preferably all of them, and so we can operate them as subsidiaries, but through equities. We've got those businesses. A great many of them are not going to do well in a recession, and they particularly fell off a cliff in the last quarter of 2008. Our two biggest businesses, luckily, don't happen to correlate that much with the general economy in insurance and energy, but our investments did poorly, like most people's, but they did, and since January 1st, they've gone down more, so our book value would be down. Not as much as the market, but it would be down significantly this year, too.
Year to date as well.
Sure.
In this new environment, though, where you've got CEOs coming out and saying we can't give forecasts, we have no visibility right now in 2009 or even beyond, I'm just curious, somebody who is considered such a mentor to many people about value investing, how to value deals, how to value a company. How do you value a company now after what has happened?
Betty, we didn't have any visibility in 2006. We just thought we did, right? Or 2007. I mean, people say, it's too uncertain. Well, the future was uncertain then. They just didn't know it was uncertain. The truth is, I go to work every day feeling the future's uncertain, and I always will. That doesn't mean I can't value a business, though, or value a farm, or value an apartment house. I look at the asset, and it's got to be one I understand reasonably well. And I look at the asset, and I say, what will this produce over the next 10 or 20 or 30 years? And if I buy a farm, I don't know whether there's going to be a drought next year, but I don't know whether, I know there are not going to be 20 straight years of drought, and I know there's not going to be 20 straight years of great rainfall.
That's the kind of straight talk that makes Buffett's annual letter so eagerly anticipated by investors worldwide. And this year was no exception. Buffett made headlines proclaiming an economic catastrophe that will not end in 2009. But one thing Buffett is not talking about is his short list of candidates for successor.
Do these people have names? The answer is they do have names, but I don't care to share.
Okay, fair enough. But in terms of, because the succession, of course, always comes up.
Always comes up,
at
right.
every annual meeting.
And incidentally, we spend at least half our time at directors' meetings talking about that.
You do?
Yeah. Yeah.
Why?
Well, because it's the most important issue there is. I mean, who runs the company? There's nothing more important, and nobody knows on any given day whether they're going to be around the next day. So the directors have. That's when they earn their pay, and they do. They have to pick the right person, and it's their job to be informed about all the possible candidates on it, strengths and weaknesses, and they all bring their own view to them. There's always a lot of discussion on that.
But then that sounds contrary to what I read, Warren, which is that you have a list of 3 people that you think could...
Well, there are 3 people.
There are 3 people.
There are 3 people that, any one of which, in many respects, would do a better job than I do.
Is it because you're constantly talking about it with the board, is it that those names change from time to time?
They could. They wouldn't change very often, but obviously there's some point where age would change it, because you shouldn't pick somebody to succeed me that's 2 years younger than I am or something. You want anybody to have a long run at the job. Okay. It's a huge plus to have a long run.
Well, has it changed recently?
Well, no, I'll say the answer is, if you mean by recently in the last year, the answer is no.
Okay, got it. And I know I'll never get the names out of you.
No, you won't. I mean, you can waterboard me or whatever it is.
When we come back, Bill Gates, one of Buffett's inner circle, on the biggest topic of discussion at Berkshire Hathaway board meetings. Stay with us.
It means doubling over the next 3 years, up to over $3 billion a year of giving.
In 2006, Warren Buffett donated 10 million Class B Berkshire shares to the Bill and Melinda Gates Foundation, worth about $31 billion at the time, cementing yet another bond between the world's 2 richest men.
I was getting advice from him about the foundation, of course, before his gift, because, I talked to Warren about everything, and, he's so thoughtful about how society works. Even the basic idea that giving the money back through a foundation was the right thing to do. Warren had been in an article in Fortune magazine talking about that even before I'd met him, and I'd come around to the view that, yep, he was right about that.
So how did 2 billionaires so far apart in age and interests become so close?
Well, I had kind of this magic beginning where my mom wanted me to come meet Warren. I'd said, oh, he's an investor. I don't know what we have in common. But as soon as I sat down with him and he was asking me, why didn't IBM do this? And why wouldn't they have seen Microsoft doing that? He was asking the questions that I'd always waited for somebody to ask.
They became bridge partners and then golf partners. And in 1994, Gates joined the board of Berkshire Hathaway.
I enjoy being on the board, but I'm sending a lot of mail back and forth to Warren that's outside of my board activity.
Can you define for me more what the role of the board is, and in many ways your own role on the board?
Well, our role is to vote yes at all times. In general, Warren likes to say, vote yes or say I resign, is his joke about that. No, we're quite a serious board. We meet without the CEO in the room, and I think that's been good for all boards. Sit and talk about, are there ways we can be helping Warren? Are there any issues that we need to address? We take our duties seriously, but it is easier because we have the world's best CEO.
How much time does the board spend on succession?
It's probably the biggest single topic we spend time on. You've got other things having to do with, the audit and directors and officers, various things like that. But succession won't happen for a long, long time, and yet, we always have to think about what might happen, and make sure Berkshire is not just great now, but forever. I've got a commitment to stay involved with Berkshire as a lifelong thing, to provide whatever advice I can provide. It's the one outside company that I am a director on, and so it means I'm able to give it whatever it requires.
Longtime friend Don Keogh has sat with Buffett on the boards of Coca-Cola and the Washington Post. Unlike those, he says, the Berkshire board has one central focus.
When you're sitting on the board, you're talking about sustainability of Berkshire Hathaway long term. The issue of of management down the road, of keeping you posted about the quality of his people and who he sees future leaders to be. All of that takes place.
Buffett says preserving Berkshire after he's gone is his main concern too, which is why he thinks his successor will probably not be like him, both CEO and CIO.
That CEO could decide to have several investment managers.
Do you give your blessing for that investment manager or managers to take the portfolio wherever they want to?
Well, that'll really be the next CEO's board. I won't be here. You know, I'll try. I mean, we'll have a Ouija board, but assuming it doesn't work, you know, I won't be. I've given them my views about the thing, obviously, and I've written them for that matter. So it's all. But someday, you know, in the morning, the board of directors will wake up and I won't be there, and they know who they'll put in as CEO.
Warren is a miracle CEO and he's a miracle CIO, and it makes a lot of sense in terms of having the best people to take the fact that Warren can do both of those jobs and admit, no, that is a very rare thing. In fact, I can't think of another case.
And the power sharing won't stop there, as Buffett has designated his son Howard to be non-executive chairman. Still, Gates and Keogh say the culture of buying companies with sustainable business models, letting managers have free rein, and keeping lots of cash on hand will last beyond the man himself.
Warren is just, you know, really such an amazing person. But the system he's built is a system that endures.
The culture that he's built into Berkshire is intense and real and I think permanent. But I'll tell you, Warren is running this company, and my guess is with the energy and the passion that he's got for the business, that there's going to be a Warren Buffett around for a long, long time.
So who might be on this secret short list when that time arrives? Coming up, we speak with two members of Buffett's inner circle, each of whom might just be his heir apparent. Stay with us.
I only have two jobs, really, allocating the capital and finding and encouraging great managers after we've allocated the capital.
Speculation about Warren Buffett's successor often focuses on David Sokol, head of one of Berkshire Hathaway's biggest subsidiaries, Mid-American Energy. Have you ever had discussions with Warren about succession?
Never a word. And I think the reality is, you know, unfortunately, my name comes up because people try to come up with names.
They come up with Sokol because he's seen as a younger version of Buffett, a friendly boss with Omaha roots, a decisive deal maker, and possessed of a trait that Buffett finds important: humility, even volunteering to step down from the company for making a mistake.
In 2004, we concluded that a development we had done out in our geothermal plants in California to extract zinc from the geothermal fluids, that I had concluded it just was not going to work, and we should stop spending any more money, and that we needed to write down and write off $190 million. You know, it was the worst mistake I've made in my career, and actually told him that you know, I'd step down if he felt that was appropriate, and that I thought it was appropriate. And he, I remember his comments well. He said, look, if that's the biggest mistake you make in your career, you'll have a pretty successful career.
A career that now includes running another Berkshire business, NetJets, fueling ever more talk that Sokol will be the next CEO. Longtime followers also compare their deal-making.
It's been said about Warren that he buys a lot of companies partly on faith. He doesn't do a whole lot of due diligence, but he just seems to know right away with the core of the company. Do you find that you have to do more due diligence when you do deals?
Warren has a unique brain that over time stores information and has an amazing ability to look at a furniture manufacturer or a clothing business and draw from all of that information the dynamics that might affect that business long term. I can do that on energy businesses because of my experiences there.
Their common instinct to jump on the right deal quickly led to Mid-American's bid to buy Constellation Energy last year.
There was a Tuesday in September, I don't remember the date, but Constellation's stock was falling like a rock. Dave called me at maybe noon or 1 o'clock.
I called him about noon on that Tuesday and said, you know, this is they're at a point where we should really try to see if we can't be helpful to them, but also there could be a good transaction here. And he said, great, let me know how it goes.
And so he called back there. He talked to Mayo Shattuck, who was the CEO. In fact, Mayo was in a very important meeting, as you can imagine, because the roof was falling in at the time. And Dave said, his secretary said to Dave, he said, I can't interrupt him. And she said, and Dave said, just take in a piece of paper with 2 words on it. And she said, I don't know, I might get fired if I take that in. Dave said, yeah, you may get fired if you take it in, but you may get fired if you don't. And so she took it in. And this was on a Tuesday. Okay. They made him an all-cash offer on Tuesday evening.
Right. Wow.
Period. And it got accepted a day later.
By the way, what were the 2 words on that piece of paper?
It was Dave Sokol.
Though that deal fell apart, Sokol's job has expanded. Last year, he was sent to China to purchase a stake in Chinese automaker BYD, not for Mid-American, but for Berkshire. Now, in years past, Buffett always referred to 3 internal candidates for his successor. But shareholders noticed a shift in 2008 when Buffett stated all candidates currently work for or are available to Berkshire and are people in whom I have total confidence. Available to. Now, that has led many to speculate whether Buffett is considering Byron Trott, a longtime investment banker at Goldman Sachs, who some say knows Berkshire almost as well as Buffett. In March, Trott stepped down as vice chairman of Goldman in Chicago to start his own venture fund with Buffett's backing, fueling even more speculation that he may be the one. Publicity-shy Trott didn't comment in the days following that announcement, but he did sit down with us beforehand for an exclusive interview about his relationship with Buffett. Up next, Byron Trott on choosing the right deals to bring to Buffett, including one with his own bank, Goldman Sachs. Stay tuned.
We at Goldman Sachs had the structure in mind, but I knew it was a structure that I developed knowing the way Warren thinks.
Welcome back to Warren Buffett's Inner Circle. Byron Trott, praised by Buffett as an investment banker who actually earns his fee, is emerging as a leading candidate for a successor.
I think that I have taken the time to understand Berkshire Hathaway as a company and the critical pieces, but importantly have really gained an understanding of the way he thinks.
Just 50 years old, Trott has built a relationship with Buffett that has been lucrative for both of them. He structured the deal in which Buffett helped finance the Mars Company's acquisition of Wrigley. And in September, he engineered a $5 billion purchase of preferred shares and warrants in Trott's own firm, Goldman Sachs, a move that became the talk of Wall Street.
We at Goldman Sachs had the structure in mind, but I knew it was a structure that I developed knowing the way Warren thinks. Mm-hmm. A convertible preferred.
You mean knowing how much yield he'd want, knowing
yield, and that he wouldn't want to take the downside risk of the stock necessarily. That a minimum return of 10%, knowing that the upside was there in the form of warrants over a long period of time.
In the end, I was satisfied with the preferred I was getting, but I wanted the warrants. I wouldn't have done the deal without them throwing in the warrants.
But on the other hand, it was a great security for Goldman Sachs. We felt strongly that a credentializing investor like Warren, like none other in the world, would separate us from the rest.
Warren Buffett will step down at some point. I mean, he's talked about succession very openly. What will you do then at that point?
Listen, it will be a very sad day when Warren Buffett steps down. But he has been incredibly focused on succession and to making sure that Berkshire is safe, sound, and secure after Warren.
And what will a post-Buffett Berkshire look like?
He likes to own businesses forever. And I think that will continue to be the primary expectation.
Well, you'll never replace Warren. But the system he's built is a system that endures, and it's a system that brings in top managers and gives them freedom to run their businesses.
Even now, Berkshire's future is a question mark precisely because of Buffett. When Fitch downgraded Berkshire's AAA rating in March, it noted that, quote, Berkshire's record of outstanding long-term investment results and the company's ability to identify and purchase attractive operating companies is intimately tied to Mr. Buffett. Fitch is concerned about the derivatives Buffett himself underwrites, which could cause billions of dollars in losses or profit. The first will come due in 2019, when Buffett would be 88 years old. And Buffett has said he will continue to underwrite them.
We do anything that I think I understand and where I think that the odds strongly favor making money, which I think it doesn't mean you make money every time. And we have, I think I mentioned 250 contracts or so. Every one of them was written by me. So, and I may be wrong on some of them. I'm sure I will be. But the question is how they turn out as a group.
So then are you suggesting that you will continue to add on derivatives then?
We'll continue. I don't know that we'll add necessarily. I mean, it depends what we add or subtract, as the case may be. But we will continue to do things, but I'll be the only one that does it.
Until the day comes, of course, that he's no longer there to do them. And when that day comes, someone will have to step into his shoes. The world may be eager to find out who that person will be, but at least for now, the only ones who know are the members of Buffett's inner circle. I'm Betty Lou. Thanks for watching.